The income that we're always talking about when we start to talk about the income that we use to determine cap rate is net operating income. Now, in commercial, many times your net and your gross are very, very close. If you're renting single-family houses, you have a gross income, but then what expenses do you have to take out of that income? Taxes, insurance, maintenance, repairs, management, whatever else. Isn't that true? Okay. Whereas in the commercial arena, many times your gross and your net are very close because we have net leases where the tenants pay a lot of the stuff. Okay. However, there are things that you need to look at when you start taking your gross income and determining your net income. If you pay the taxes, do you have to take that out of gross income before you get to net? Absolutely. If you have management expenses for somebody to manage the building, do you have to take that out? Okay. So when we start to talk about your gross income, your potential rental income, when we talk about gross operating income, what you do is you take the potential income, if the building was 100% fully leased, multiply that out by the number of leases so you get gross income, but your potential income is always going to be less vacancy. Now, how much is a good vacancy number to put in? Many times people say 5%. Well, 5% is a rule of thumb for banks in a good economy with optimum operations. But it's always a function of what's going on in the economy. If you're working in an economy where the vacancy factors are really 10%, everybody's operating at 10% vacancy, you don't want to use 5, because if you use 5 and you're going to be running 10, you're shooting yourself in the foot before you even get started. Okay? So whatever the market says is what you want to use as vacancy. Now, here's a common rule or a common thing that happens when you're dealing with net operating income. People do not put in a couple of things. One thing people may not put in is management expense. Why would they not put a management expense in? Because they manage it themselves. Well, are you going to manage it yourself? So you have to put in a management expense. Okay? Even if you plan on managing it yourself for a while, because you want to get a feel for what's involved. I hope you're not going to manage it yourself. That's work. A lot. Okay? You want to hire a company to do the management for you. So you have to budget whatever is a normal management expense for the area. You know, 6, 8, 10%, whatever makes sense wherever you are. But put in a management expense. Another thing that people fail to put in frequently is the vacancy allowance. So you question them. You say, well, you know, there's no vacancy allowance in your numbers. Oh, it's never vacant. Oh. You mean somebody moved out today and you had another tenant move in tomorrow? Well, no, we cleaned the, well, no, it's not never vacant. You know? And by the way, if you take a set of financial statements to a bank and there's no vacancy, they're going to plug in 5% regardless. So 5% is the rule of thumb in a good economy.